How's it going today? Oh, that's right, your mic. Just wait here a minute. I see a beer you're drinking there. All right, 1 second. Oh, looks like I have some sort of filter on me here. I'm not trying to look pretty here, guys. See if I can.
Can you hear me?
I can, yeah. All right, here we go. Oh, weird. Okay, there we go. You get normal appearance today. I don't know what that deal was. I'll just give it one more minute here. How are you guys surviving here?
Well, it's been a roller coaster kind of couple days here.
Yeah.
I mean, they can't seem to make up their minds.
That's true. Yeah, there's a significant amount of chop, and hence naming it the chop zone. But hopefully here you should see some sort of relief. It's just taking a long time to develop here, but I'm starting to notice like a lot of volume accumulation here. So we'll see. All right. Well, yeah, let's get rolling here. But so before we do that, do you guys have any specific questions? Anything you would like to cover?
Well, okay. Natural gas we can talk about.
Sure. Certainly can. Okay. Cool. All right. So let's get rolling here. So I'll start out with there you go. I'll start out with just the Nasdaq in general. I'll try to point out some stuff here that I'm thinking looks relatively safe. So overall here, I think we wrapped up the last, well, nothing's really happened in the last couple of days, really, like the last week and some change. It's actually kind of a good week to take off. So that was helpful. It sucks when like the market's melting down or it's shooting to the moon here when you're just sitting on the beach. You're like, So anyways, so we talked last time about how this here is like a pretty clear ABC, and what this is looking like here is a pretty clear ABC at this time. Let me pull up a quick chart here. This is let me grab here we go. I like to use the small lot, and I'll share this here in a second as soon as I can get this on my screen. All right. So, and by the way, there may be some children running in here screaming. Not sure when, but it might happen. Anyways, can you guys see this? These different patterns here. I'm trying to make it bigger. I don't know if I can. See if I can. Here we go. This will be better. Okay, so this is just off a regular like Elliott wave website, and what I like to show here are like different types of flat corrections. Now this is where a lot of people get tripped up because we see something like we see something kind of like this where we have our these like ABCs that kind of lead up here, and it's not it's not like officially complete yet. It may have a little bit of room to run yet, but I still think overall what we're seeing here is still tracking to a regular flat correction, and this might be a longer term wave 4. So let me pull this up here. I'll just do a copy. Sometimes I put these on the charts, sometimes not. Okay, so really what we're looking for here, and this is why I've been pretty cautious with adding positions, like long positions, is just because sometimes these flats, like you don't really know if it's actually going to be a flat. Sometimes it might actually be like a wave 2. And what I mean by that is sometimes you might see something like this where it pulls up to maybe just this level and then it just sinks down to the bottom. I mean, it hasn't happened very often. just because like if that's an impulsive sort of move down, it's really, really strong. You see a lot of, like the market just drops like this, so those are those like typical wave threes. And it still might actually turn out to be one. We're not quite sure yet, but what we do know is that there's been actually a decent amount of accumulation up here. So that's not good for shorts, but it seems like these guys have been keeping a lid on some of this volume. So there has been some accumulation up here, but in theory, having this sort of capped out up here, it kind of seems like this, 25, 835 levels like this is like a pretty big point of resistance right now. Everybody was waiting for what the Fed was going to do. Typically, when you have we have the news from the Fed, we have all these all these speculation and whatever, but I mean, they're cutting rates and injecting liquidity in the system because they must see something is wrong. Like I mentioned in chat today, I do think that that's probably the wrong approach because they're trying to they're trying to micromanage unemployment, but really they're just delaying, the back half of the business cycle. And the more they delay it, the worse, the worse it's going to be when it actually does, when it actually does materialize. Not saying that's going to happen tomorrow or anytime soon for that matter, but what we're trying to do is we're trying to just pick out, like what's the next move here, and as these things kind of develop, in the absence of any large sort of correction or any sort of large move up, there hasn't really been a whole lot of accumulation, other than just like at these different major points. So you see a lot of pinning that's going on here. Anything higher, you might have to see some dealer hedging. Anything lower, and you should see some sort of break. But there's still a lot of this is kind of like an irregular shaped volume profile here, but I can still see that there's a decent amount of buying. So in theory here, you could see an extension up to about here, and so like this 26,000, 120, that kind of thing for the Nasdaq. And if I was going to pull up oh, here we go, perfect example. So this is the S&P, just as contrast, and what we see here with this is, well, first, what's going on with that? Okay, got it fixed. So these sort of moves here, typically with a flat correction, you can see this head up to this fib level, which is this 0.941, and likely you will see some sort of like bounce off of that, because even if people are counting 5 waves, then this could be technically a wave 5. But what I saw earlier today is it doesn't really look like a 5 wave. It looks like a pretty clear ABC here. Excuse me. So I guess what does this mean? This means that typically you see, like the Fed announcements become like the culmination of, a couple months worth of trading or a couple weeks really. And I think that, this cycle, obviously like it is bullish news, but in the same time, you can, we could still make the assumption here that if the S&P does hold and we don't get really, much above this level here, and we should know more by tomorrow or Friday really, because usually the first move up is not the true move, because, under the surface, the Fed wouldn't be cutting if unemployment wasn't rising, or some other economic sort of thing. Like usually they've been trying to pump the brakes for a year and really two years now. Some change with quantitative tightening and all these other things, but the bottom line here is that the Fed doesn't typically pivot like that unless they're seeing underlying weakness, and underlying weakness, it usually starts at the backside of that business cycle. So when we're looking at, excuse me, something like the S&P or something like the Nasdaq and S&P, we're just trying to figure out like where we are in that cycle. Now, price levels and markets aren't a true reflection of the economy, so we know that, but we still want to try to identify the different types of patterns or like places that we're in. So as of this time, I don't think that this really looks like a wave 3 because it's just not powerful enough. So right now we've been kind of like, we just kind of like been dancing around here and hasn't really been, much of anything. But this kind of screams to me like this correction is still not done. So when we're looking at this sort of So when you look at this volume profile with just the last couple of days, you see a significant amount of accumulation down or up here at these levels. So if you look at it a little bit closer, you see that there's a pretty significant imbalance of sell pressure up at these levels. So it's not a surprise that you're going to see some sort of like some sort of drift down. Let's say like tomorrow or Friday. But really, it's up to the seller. It's their game to lose, So if we do have a lot of this positioning that turns out to be bearish, and the market does get sold down, highly likely you're going to see, I don't know, just like it's either going to be a continuation, and you're going to see something like a strong sort of sorry, I'm getting ahead of myself here. Let's say it does jump up a little bit more tomorrow or something like that. Highly likely you would see some sort of move like this, and that would actually complete this sort of wave 4. And what is interesting about this is that you could also make the argument. So let's say this happens. You see something, it's just kind of like a slow burn kind of thing. Just looking at some of the volume here, this to me looks more of like the possible path, which is more of like a bull flag. So this also can mean that this would be technically like a wave 4, and then what we could see after this. So this is I guess this would be the bullish sort of scenario, where you could see something like this. Let me change color, but just in general, I'm thinking that this is, I think a probably pretty likely sort of scenario, at least if it's turns out to be bullish. Now the levels that I guess let me stop there first. Does anybody have any questions or like does this not make sense? Am I missing anything from a bullish perspective? Okay, and I think you could still have a pretty fat sell-off like this into, let's say, the end of December, and then between the week of Christmas and New Year's, you could have big support, big buy up, that kind of thing. Like the first stage of like accumulation and buying up doesn't typically happen very fast, but if we look at what happened here, actually, hold on, let me do this at the day level. I know this would be a little cluttered, but there's a purpose here. So you see from the day level, you get these large moves in a very short period of time. So you've got this volatility here where, let's see here, like in 10 days, you've gone the span of what is that, like 5% in either direction. So I mean that's big volatility. So, and you can trade that. And what I would be looking for is a good buyable dip. So I would target something like this, where you could buy the dip here, but you don't want to buy it just when it hits the trend line. What you want to do instead is you want to wait for, oops, sorry. So the strategy here, at least from a bullish perspective, and then I'll move into the bear. But so from a bullish perspective, this could still be that flat correction, like we said, but still be like a larger wave 4. And I think that like this last leg up, if it does materialize, that is going to be like our blow off top. Everything's fine. Hey, we're having a great time. Everybody's making tons of money again. But the reality of it is like once you back it up and you look at a lot of these other wave counts and such, this does look like a very a very clear, how do I say it? Like you could draw it like this, I guess, where you could have this longer term sort of move here, which would definitely be like a like the culmination of all this. But you're starting to see declining volume, lack of participation. You're starting to see bad news. Like sometimes when markets say it's bad news equals good news, and it's like, well, now you're starting to see layoffs and the real sort of meat and potatoes of what does constitute the beginning pieces of a correction, or not correction, but like a recession. Of course, it always depends on the wording. Whoever's in charge, power, or whatever. It's just an economic decline or what. It doesn't matter. Same crap. People lose jobs. People don't have money to buy stuff. That kind of thing. So, what we're kind of looking for here is if we do see something like this, you want to see if it breaches the trend line or not. So if it does something like this and heads down just a little bit lower than that, you wanna target a buy like right here, that kind of thing, or in this sort of area, because what that does is it's a retest of the broken trend line. So if the bulls are serious about yanking this thing up higher, that's where a lot of that volume is going to come in. So you might see, I mean, I have seen some fake outs before, and it's kind of a dangerous place to trade. But if you do it right, you can really nail the bottom. I was thinking about doing a long punts right around here, back kind of like when we were hitting those lows, but I got sidetracked. Didn't do it. But I also kind of thought too that it might head just a little bit lower yet, just because we breached the top of this last prior consolidation zone. So hey, can't win them all, right? So anyways, so that's really where you want to try to target a buy. I wouldn't try to, because we're not sure yet whether this is going to be like a 5-wave down or another ABC. It could definitely turn into one of those, but I wouldn't target anything around here. You could, in my opinion, if you're going to get a lot of selling, it's gonna knife straight through this sort of buy support, and it almost has to. That's just because that's how the sellers make money, is when all the bulls have to flip and cover their longs, and that's what creates that liquidity there that drives the market lower, and then so it's like it costs them less money to move the market that way if they force covers. So that's kind of what I always look for with bullish or bearish scenarios, is where you see these moves, like for example right here, up at the top of the range. So tomorrow, if we have something like this, and it just stays there for another day, and then next week we see some sort of decline, something like that, it still is a valid bull flag, and you should still see some sort of decline. But the key here is all this volume that we see. Here we go. Let me zoom in here. Yeah, the key is really just looking at the volume profile, and there has been a decent amount of buying and accumulation in this zone. But once you get these like the point of control for the range, this is where you really want to watch and see if it sells through or not. And the amateurs are gonna come in. Excuse me, it's a little sore. So the amateur is going to come in right around here and try to get in and buy it, and the seller is going to try to force it down, and then the weak buyers will close their position, create some liquidity and stuff. And for example, like you can see that there's a decent amount of like sell delta down here, that if I had to eyeball it, it's probably this 0.768 retracement level or something kind of close to that. So I guess the main argument here is that when you look at this volume profile, it's got like the shape of a B, and well, it's kind of, like I said, it's kind of irregular, but you still have higher buy deltas, and you should see some sort of support coming here. But I would look for that to be sold through, and if it continues, then the next level is like your next volume iceberg. So, and you should know by now whether that's going to be like an ABC or if it's going to be some sort of a 5-wave impulse. And that's really just like on how fast the selling is, because this last leg typically is very fast, if it is correct. So now we've been looking at that for a while. Now there's another scenario here I still want to walk you guys through. Even though I said it doesn't really look like a 5-wave up at this time, it could be. We don't know. So this is, I'd say, like the uber bullish scenario, where you have just another move up to space here, and this ends up being like a wave 4 of wave 3, but it still hasn't really moved all that fast. So I still don't think that you are looking at a wave 3. I think you're looking at some sort of B wave top. But so with that being said, that's like the super bullish scenario, and I don't think that's there's enough time for that right now. Not time, but I don't think that there's enough gas in the tank, I guess you could say. There's a couple of buyer exhaustion signals that have been firing lately. So that's kind of the bullish counts and things like that, and it really kind of covers all the major indexes here. So like, your S&P, this one retraced a little bit higher. But as you can see, it's got this, really solid consolidation zone. And one thing else I'd like to point out is that this looks significantly different than the Nasdaq, right? So the Nasdaq, with all that concentration of capital, that's probably why you're seeing a lot of buying, because it's keeping the market up. And then when you look at something like the S&P, you see here that it's got these, the higher sell deltas. It looks like significantly different than the than the Nasdaq. And I do think that, again, that's just partly because there's a lot of a lot of concentration of capital there. So you see a lot of that reflected in the indexes. So now if we look at the 6850 level, this is, in my opinion, the key level for the S&P. If we're going to see some sort of downdraft here, this looks like enough sell delta here. It's in the same zone where we had the last B wave, where I think that a short at these levels would be pretty nice. But again, with a stop, I think that there's been enough of this distribution here where I think that you'll see some sort of move down if they're going to do it sooner versus later. So again, if you're going to try to do some shorts or something like that, right around here would probably be a decent entry, like the 6900 level, at least for like a longer term sort of move. So looking at this market, breadth indicator thing here, we are seeing this divergence again. So even though, it does look a little bit elevated, not elevated, but like, 52, almost 52% of, all the basket of stocks here are trading above their 20-day moving average. But just a couple of short days ago, that was much more. So typically you see that before you see some sort of decline. So if you look at some of these, these other peaks that we see, and you see, we had just, a decent decline, right? And then you got a little bit of a buy up, and then you get another leg down. So I think that's kind of why we're seeing, or that's kind of what's giving me that top of a B wave vibe, because now we're seeing, sort of like this precursor here. And if we look back in the day, let's see here. Yeah, so you can kind of see here, this kind of happened last time before we had like a big stab down, and that was only a couple percent. But like what we've been talking about in the last couple of weeks here is that like these are like testing to see buy support from bulls. But anyways, I think that the market's getting a little tired of being elevated, and there hasn't been a lot of really good buying opportunities. But when you do have those big buying opportunities, that's when everybody kind of rushes in. So it's like you gotta kind of time it. So like you take your short profits quickly, get out. You don't commit a lot of capital. You're long, this especially since we don't know if it's going to be a deeper correction or not. Because if you think about it, like back in April, if you held TQQQ and you went away for 3 days and came back, you would probably have half of your position. And I mean that's a pretty deep cut, but that's how fast that stuff moves, especially when you are long and then you have a sell-off. It's much different when you have shorts that are just decaying every day and kind of like drying on the vine, because eventually when the pendulum switches the other way, you'll get that compounding effect on the back end. So you kind of like make up that loss, but it's not like you're losing 10% a day. You lose like 1 or 2%, that kind of thing, versus like holding along. So it's that kind of proportional that proportional gain and loss. So from a bearish standpoint, I'm tired of being bearish. It just never works. But let's assume this actually does happen. Okay, big caveat. All right, I understand. I understand if you guys are like, all right, shut up. I'd probably say the same thing at this point. So I'd say a mild correction, you could see something like this. That would be mild, and that would probably set up your first leg down, that kind of thing. But it's still, like you could still probably grind a little bit longer up here, get some more distribution, and then you see something like this in January. So it kicks off January with a reset of 9%, and that's just the S&P, or sorry, that's just the Nasdaq. The doomsday scenario, which is I don't think ever coming here, but if you really wanted to measure something like this, like a 5-wave down sort of move, you could see something like this, where you would actually test the 200-day moving average, which we haven't done in a long time. And I think what has been happening is that there's been a lot of desensitization. Is that a word? Desensitization? Desensitized. Yeah, whatever. You know what I mean? So English isn't my strong language. So realistically, you could see something like this, where, and I think I was joking about this couple of weeks ago, where I was just trying to model this out, and I was getting funny looks, about it, and it's just like, well, if you think about it, I'll show you guys like what that actual correction might mean. So if you think about it, we've gone 60% from peak to trough. Like that's insane, or from trough to peak, I guess you could say. That's an amazing climb in a very short period of time. That it is historical, to put it in context. Something like this, though, like just from peak to trough here, we're talking 20%. But if you zoom out, it's really not that much. 20% when you've already put on, a ton. That's I think that's actually a reasonable sort of correction at this point here, to correct some of this excess out of the system. And what that could also do here is that could reinforce this sort of longer term megaphone pattern, where you can kind of see that you might have like a even deeper draw on like the 1600, which I think is not realistic at this time. There would be a lot of support and a lot of buying and stuff that would come in. There's really no big catalyst for something like that. So I think that's unrealistic at this time. But something like this, like some sort of pullback, I think is realistic. But that again is a 20% pullback. It's also a test of the 200 daily moving average. And if we end this year positive, by the way, that would also be another record. So because like we've had back-to-back years of 20% growth in the market, and then also with April, what ended up happening is we ended up having the same sort of like just massive dip buy. It is indicative of some sort of mania, of course. And then when you kind of zoom out and you look at it, people are talking about like, oh, when are we going to have the blow off top? I think we're having it right now. I mean, if you're looking at it, this is, in my opinion, this is a pretty clear 5-wave sort of structure here, and this would constitute some sort of like a like a this is it kind of thing. But again, like the volume isn't high enough for that to for me to commit that and bet the farm. But I mean, you can kind of see when you're zooming out here that the selling is really outweighing a lot of the buying. When it comes to looking at some of the different daily views. So in my opinion, the big boys are selling, and they have been selling for a while, ever since we got up to around here, like this 22,700, 750 level. But yeah, it's just like you don't want to be premature calling some sort of correction. You could easily make another new high here at like 27,000 and then crater down. But I don't want to focus too much on that because we don't know what's going to happen yet. So I would say tomorrow and Friday are going to be key for understanding like what happens. So if we kind of wrap this up, at least like the bearish side, if we wrap this up, there's also something that there's also this little diamond shaped pattern here. Sorry, my wife's yelling at my kids. Sorry if you can hear that. I'll blame her as being part of the problem then, because she's getting all riled up. But anyway, so you can also see some sort of like diamond top here. I don't like these patterns very much. They don't really produce, but still like that flag pattern I showed you guys earlier. This is what I think is more realistic. So if we do have some sort of peak to, like I said, peak to trough thing is like 8%, 9%, something like that. Depends on the index, but I think what's realistic is you can see some sort of pattern here where you have this and then kind of jumps up, and that's like your last hurrah. So we'll see what happens. Any questions about bearish or bullish projections for indexes? Okay.
Nope.
All right. Gains and charts are trash. Yeah, none of that. Okay, good. All right, let's pull up some of the other stuff here. Make sure you guys can see this. Okay, so really it's just looking at the other. It's looking at the same Nasdaq chart. It's just with some other stuff layer on top of it. Some fib levels. It's a little bit more precise. Like chop zone up here, that kind of thing. Anything above is a long. Anything below is a short. Hopefully that makes sense. Oops. Yeah, I added that with the S&P here. So like I said, anything above these high levels here, like the 6,900. Oh wow, I didn't know that the 6,900 was actually hit. Well, that's cool. Sometimes when those key numbers are hit, that's also like another signal too. It's kind of weird to say, but yeah, I mean you could definitely see that there's a lot of selling up here. So I would have some confidence in like a short-term short. I don't know if that's the right way to put it. Short-term short, couple days. Like for example, you might see selling tomorrow or tonight, really, like tomorrow, Friday, and then maybe a dip buy on Monday or Tuesday, that kind of thing. But it's too early to tell. Hopefully, I'm not making outrageous claims, but it's kind of like a gut feel on this one. I think the Dow chart looks a little bit more conducive to these theories, to these wacky theories of any sort of selling whatsoever. Sorry,
there was a quick sell-off right at 4 o'clock.
Yeah, right, and that was I thought that was actually pretty interesting, and
especially in the crypto too.
Yes, yeah, and yeah. Here, let me pull up that chart real quick. So this is like my normal chart that I'm trading off of, like normal throughout the day. So when I was watching this go up, I know there's a lot of lines and stuff here. I'll explain this in a second. When I was watching it go up, you're looking at like a ABC here, but what else you can see is that typically a C leg can reach up to this like 1.618. So I don't really know if like the pattern's quite complete yet. I think what we might see is I'll just kind of like freehand draw this, but maybe we could see something like this, and then like another run higher to like this 25,850 or something like that tomorrow morning or something like that, and then that would set up at least something that would return back to this level. So if you think about it, like the options positioning was very bearish yesterday and today. And I mean, zero DTE was kind of like all over the map. That didn't really give a good. That didn't make me feel warm and fuzzy about, like going long or short either way. But when I start to see these sort of, longer term retracement levels, like, all this stuff happened. I mean, okay, it's been a month, so it's not as significant. But when you're looking at stuff like you're talking about down here, like this is not a healthy sort of distribution. You can see a ton of buying up here, and that's just sorry, if you can hear that. Like you see a ton of buying on the way up, but whenever you see these sort of rounded tops, that's usually a sign of weakness. And of course, you can also see that there's a lot of distribution up here, or at least positioning short. So that's another little indicator here that I'm thinking that you might see some sort of move down. And I mean, if you think about it, the rates are like the Fed lowering rates and essentially acknowledging that there is weakness in the economy when we are so close to all-time highs. I mean, in my opinion, if I have billions of dollars on the line here, I'm selling out. Like, because how much better is it going to get? Probably not much for long, right? So I like to refer to that as there's probably not much juice left to squeeze out of this market unless the speculators come in and just keep driving it.
Well, that's what you don't know.
What was that? Sorry.
That's what we don't know. How far
that's what we don't know.
Pushing it. That's
right. So I think I think in this situation, what is like what's of course, if you're going to short, use an abundance of caution. But I do think that short term there is a very, there's probably a decent opportunity to make a little scalper sort of trade. If you use some tight stops or something like that, but I would use a stop instead of like a hedge, if that makes sense, just because if it ends up running higher, then your hedge is stuck as well. So in this sort of situation, I would use, like, for example, tomorrow morning, if you do see something like this, you could try to enter a trade like right around here and then set a stop a little bit higher than that. So like if you're going to do a short, for example, if you're going to do a long trade, because if it goes, higher than that, then odds are it's going to continue. Just because it's so close to the all-time high. Those guys are, never underestimate the power of greed. But even after the market opened tonight, let's see here. Yeah, we got 38 minutes for after hours here. It's still just been this slow, precipitous decline. So we'll see what happens. But I think everybody would wake up shocked tomorrow morning if the market was down 1.5%. And that would force a lot of bulls to cover. But at least the smart ones probably would have got out on top here. To be honest, for transparency, I did take a short up here today, just like with my Level Fund Money account. I did like a handful of puts, expiring, like 30 days, something like that. So it's not like you're pressed that much for time, but there is a little bit of weakness under the surface here. And even if we do get this bullish scenario, there should still be at least enough room for a bit of a pullback. I mean, we're also seeing elevated RSIs, and every time we see an elevated RSI like that, you always get some sort of move. So yeah, so that was that's a good point, Don. I just wanted to touch on that here because I know like I have to be careful because some people do a lot of day trading, some people do swing trading and stuff. So I try to cover all the bases here. Okay, so the 10-year. 10-year had an interesting reaction today. I kind of think that this is the wrong move. I think it's a fake out kind of thing. As I mentioned in the discussion today, like lowering rates does not help taming inflation. So it is my belief that they're either kicking the can down the road or they are or the bond traders are trying to sell it down or trying to buy it up for a little bit of protection. But short-term yields should be they have no business being below 4%. And if they stay above 4%, then highly likely they're going to make a run here at this bull target 2. So I think you're also seeing some sort of like kind of a rounded bottom here.
Yeah, well, if you look, 418 is the key level. That if it breaks above that, this could really start to move up.
That's right. Currently, I only have 1 unit on it, or 1 unit long TMV. But thinking that if let's say if we have some sort of because we got this like inverted head and shoulders here. If we ended up seeing something like the bullish scenario I showed you guys before, if we see something kind of like this where it tests the 50 again, you could see a pretty large run up, and that's where I would target adding more, adding more long positioning. Really, where let's say if we look at like just a quick retracement. So this I would say like the 4.06, something like that. That's where I would target because it's just below that 50 moving or 50-day moving average. And even though the chart's got a death cross on it, with the 50 is the purple line and the 200 is the turquoise line. Even though it does have a death cross, there is no reason why that should be there. I honestly think that there's just been a lot of accumulation, and I think that it's just all fun and games. Yields don't really move very fast. Our bonds in general, but like they are huge. Like if you're trading bond futures, like you better have deep pockets because it's like $28 a tick. It's huge. You can go bankrupt like in an hour. Go eat dinner, come back, and you're broke. So,
well, I mean, the thing is the rates have been moving up in Japan, in Italy, in Germany, and there's no way. I mean, that's why the dollar's been easing off but there's no way that this thing can go down much when it's competing with all these rates that are going up.
Right. Then you're gonna start to see those. So let's say it does, right, or at least you get a little bit more yield fall, um, or whatever the term
Yeah.
is for it. I'm a little lost for words here, guys. I drank a
Sounds
lot
like
of rum last week, so
sounds like a James Bond movie, but okay.
that's exactly. Yeah, it's some sort of international financial conspiracy. But to be fair, like European economic data is not looking so hot. They're also, like you said, the yields are climbing up. They're also seeing the same problems we are. Like everybody overspent over the last couple of years. Started with COVID, where everybody just spent trillions of dollars on whatever, and we're kind of in the same place we were before. But now it's like European countries spent sort of the same, and I think actually the U.S. spent more like per capita, but um, it's kind of funny. But it's just like all these developed nations spent a ton of money, and the problems that we're getting with this now are going to start to materialize like in this inflation. And we heard Powell talk about it today, saying that like it's too like we will get back down to 2%. Well, what does he care? He's out in a couple months, right? So he's kicking the can down the road here. He doesn't want to be blamed for causing a market crash. So he'll give the people what they want. They want a rate cut. Maybe it'll stimulate the housing market, but probably not much, because if you're getting laid off, you're not going to buy a house. So sorry, speculation aside, the real facts of all this, like, done. I love your input. It's great because there's because when you have these yields across these across these different different parts of the globe, like it drags everything with it. All boats rise and fall with the tide. And if you spent a ton of money, like all the other developed nations, then highly likely your yields are going to increase. But if they decrease, then that's an arbitrage opportunity, and that's where you had that, like, the Japanese yen carry trade blow up, and that's where you get it. You started to get a lot of this, a lot of the smoke and mirrors and finger pointing and blame and stuff. But if raising rates a quarter point can cause that much of a financial catastrophe, just imagine what would happen if you had, like, overnight, you get major moves from some of these different central banks. And I don't think that there's like danger of that right now. I think everybody's kind of looking at, like the U.S. Fed, thinking like, what are these guys doing? Like lowering rates? Like they must see something that's kind of concerning in the economy and stuff. Like obviously inflation's at a 3% clip, so lowering rates is, in my opinion, a stupid move, especially if, like, the reasoning is that these tariffs are just a one-time cost increase. Well, I don't know if they're going to be a one-time cost increase, because if inflation keeps driving up prices because the economy is still running hot in certain sectors, that doesn't matter if it's a one-term price increase. If anything, you're setting the bar higher, and you're starting from an already weakened standpoint, if that makes sense.
Well, I think they're lowering rates, but they're lowering rates only at the very short end.
Yeah. And they're trying to refinance all that debt,
and you
right?
see, they're not, the financing of the debt is moving to all T-bills.
Yeah,
they're not issuing any bonds.
Yeah.
So
Yeah, because they don't want to pay the high coupons in 30 years.
So they're getting this low rate at the short end to finance the debt, but the bond market is saying bullshit.
Yeah, exactly. No, your French is perfect. So if you think about it, even if you have these low rates, like if they're using the short end of the curve here to finance all this debt, they're expecting that in the next 5 to 10 years that the rates will be a lot lower, probably because the economy is going to be in trouble. So that's what I'm kind of thinking here, is that they're using they're using the beast that they created, as an advantage to absolve all this debt and all this spending that they've created for themselves. So I mean, it's a masterstroke of finance, to be honest. But
well, if we get a crash, then the rates will come down.
Yeah, exactly.
Everywhere.
Exactly. And I find it hilarious, where it's like you've got rate cutting, but you've got markets hovering around all-time highs for like the last 3 years, and nobody's saying, like, guys, like, either you have a 30% correction now, or you have a 60% depression. Like, have you guys had a chance to or have you ever heard of this 1929 book by Sorkin?
Yeah, I read it.
Oh yeah, it's a good book. and the parallels are pretty
It's just
crazy.
my only complaint was he kind of passed over. He went up to like when the crash happened, and then like he skips to like 6 months later.
Yeah, skips to like
Really
spring.
doesn't go in to explaining how the impact spread to the whole economy.
Yeah,
he kind of passes over that, which is that was my only disappointment.
Yeah, I still thought it was cool with at least calling out like the speculators that kept wanting to drive the market higher, like Mitchell. They're making all this money by getting people just sucking all the money from all the little guys. Like
that's what's going on today. That's what
exactly.
That's why he's paralleling it to today.
Yeah, so I just thought it was a really good book. It's like, oh yeah, okay, yeah, that makes sense.
Have you ever read anything or heard of this German social economist Wolfgang Streeck?
Oh, the name sounds familiar.
Okay, he's like a neo-Marxist, I guess.
Okay,
but he writes about the end of capitalism.
Okay,
and basically talking about the massive amount of debt that's being created and how it's being financed and how we're not taxing the rich people, and how it's you're creating a French Revolution situation.
Yeah, and you either have like the French Revolution sort of situation, or you have like the Weimar Republic. Either you have a revolution or people carrying wheelbarrows full of German marks.
Right.
Like
that's where we're heading.
Yeah. I think it's probably hyperinflation, and I just think it's like the parallels to the 70s are pretty close.
Using the money for wallpaper.
That's right. Yeah, exactly. Just walking through Walmart, like, oh man, I remember when I used to get a Coke and it was like $1.25. Like now it's like $2.60 and you get them out of the cooler.
If we have a crash like that, and the only way they're going to get out of it is to inflate the hell out of it.
Yes, exactly correct. Yeah. They'll come through. Even if they inflate it, they'll come through with some sort of other solution, like we're going to switch to this this new money system or something like that. That's gonna hit the reset button so they can spend more. So, anyways, I do have to. I got to speed up. I got about 10 minutes left. My kids can have a Christmas concert here. I gotta get to. But yeah, I mean, I could talk about this stuff all day. Of course, you guys know that. Yeah, I'm super nerd. But I do appreciate you guys. I do appreciate the commentary and stuff, and like this stuff in the discussion channel. It's like my wife doesn't want to hear this stuff. My kids don't want to hear this stuff. They just say. I just asked my daughter, like, is it blue or red today? She's like, I'm like, blue. Like, why? Because it looks pretty. Like, okay. So, all right. So, anyways, to kind of keep plugging along here. So,
you want to cover oil and gas before we go?
Oh yeah, sure. I'll just touch on metals here real quick. So gold here, I think is probably gonna hit this target 2 first. This kind of looks like a triangle here. This looks like a C wave, kind of 5 wave up, but it hasn't had a new high yet. So I'm thinking it probably does this quick little sprint up here, and then it kind of rolls down like that. So and silver kind of mirrors the same sort of thought process there, where you are seeing kind of like a run up here, like a 5th wave.
Well, you got a squeeze going on, is what you got.
Yeah. Yes. Yeah. And if you're a market maker in silver, you're probably not doing so hot at the moment. I heard those guys are massively short when it was back down here. Remember before the breakout?
Yeah, I mean, it's only the metal. The miners are not going anywhere really, and
right.
the gold's not going anywhere. It's just the metal, the silver metal itself. Platinum and palladium are just treading water back and forth.
Right.
So it's crazy.
Yeah, indeed it is.
But it doesn't stop.
Yeah, exactly. So what I'm kind of thinking here is that, like, when gold hits, when gold hits this level here, we kind of have to see where it goes, because I mean it could extend up here to this 0.886 before it heads back down again. And I think that once gold hits one of these major FID levels here, then you will see some sort of turn in silver. But silver, to be fair, silver was leading the way. Because I remember when gold had that big drop, silver made this new high, and I'm like, wait a minute, that doesn't really make sense. And sure enough, we had a little bit of sell down here, but now you look at the volume, you got a lot of sellers trapped down here. So I think that you'll definitely get back to this 48 level again. But anyways, look at oil real quick. So I think
still
go
looks
ahead.
like a bull flag. Huh?
Sure does. Or looking like some sort of downward channel. No matter how you slice it, it still looks like a consolidation zone that should move to the upside. Like you've had, excuse me. Again, sorry guys, my throat's a little sore today. You do have, like this is actually a decent amount of ground covered today. From this morning, I mean, 2.25%. That's pretty nice for oil. But you also did have that tanker seized, right? The Venezuelan tanker, something like that. I think I just saw something like that.
Yeah.
It's guys, it's tough to keep on the news when you're looking at this stuff all day too. So I got to do all my reading at night. But anyways, so I do think that if this was a deep kind of B wave, that kind of thing, we should still see some sort of 64 to 65 kind of price appreciation here. I mean, we've been on the decline for quite some time, and the lower it goes, the less profitable any of the producers are going to be. So even though it is a squeeze on Russia and Venezuela and all those oil producing nations and stuff as their primary source of income, I still think that you're going to get screams from the American oil producers that at least need to see oil back to kind of where it was back back in October, when we started to get this kind of flag here. But yeah, I mean, long story short, we are seeing some sort of how can I adjust this from sorry, but you are still seeing some sort of zigzag kind of down here. So it is possible, like Tim mentioned the other day, that you might get like a 55 or lower. It's possible, even lower than that, maybe like a 52 if you really get the floor that falls out. But I'm getting like a buy signal here from the DeMark indicator. So that's at least in that's the weekly level for a buy signal. So even if we just get we got another one back here in May, and then it's shot up to the moon there with the Iran stuff. And I think people knew something was coming because there was enough consolidation and they just went to space. But same thing here, where like you can just kind of see it's just there's a lot of selling, and there's been nothing but selling all summer, all fall, that kind of thing. So kind of compare and contrast that with gas. I think gas is ready to poise. Excuse me, gas is poised to ascend to the heavens here. I wouldn't say heavens, but it should gain.
I mean, it came down to that level I talked about last night, right to it, the 240s there, or whatever.
That's right.
And
that was right by that 50 or the 50-day moving average.
If that holds for a couple days, I mean, you mentioned 612 as a target, which was what, the 786.
Yep.
But, I would keep a runner for the 1.6. It's
yeah, you could
7 whatever.
Yeah, you could. So I added the third unit today. As much as I don't want to do more than 2 units in boil, I still think that again, it's been depressed enough where you got another kind of buy signal that fired here, and I mean, if you think about it, September had the worst performance of like any September for gas like ever, right? Something like that. So I mean, I think it's tied to oil. If we get some relief there with oil, like I think gas will probably shoot up, because I mean, natural gas is just a speculator's dream. So you get it's if you deploy enough capital, I mean, and you're also looking at big buys too. Like these are not, this is nothing to sneeze at here. Like you got both of these big buys. So to me, this kind of looks like an ABC, where I think this might be like the last period of consolidation here, where you might see something like this, where you see like an ascent here to kind of retest this 20 or this 200, and then maybe you see like a big sell off from an inventory report or something like that. But I do think that you might be seeing more accumulation, but now we're kind of off to the races here, where you might actually see some faster movement with the sea leg coming up sometime soon.
All depends on the weather report.
Yep, that's right. That's right. So if we get a cold winter, then it should be a profitable winter. So yeah, we'll see what happens with that. But yeah, good call, Don, on that on those levels. Okay, so stocks here. It's looking a little extended. I still think that like you see like this. Look at this volume. Come on, it's nothing but buying, and then you see almost no sellers, and all of a sudden they're all going to show up. So I think that you're seeing an irregular sort of correction here, where the irregular it typically goes up maybe like 5%, or sorry, like a flat correction. You could have like an extra 5% above the last high, and that's kind of what it looks like to me right now. But anything above that, then it would constitute like an irregular correction, and then I think like 320 is probably a good level to stop that at. We'll see though. I mean, stock's been on a tear, but what's weird is that Nvidia has been dragging down. So it must be everybody else. So yeah, no kidding. So this is where, to kind of pivot here to Bitcoin, this is kind of what I think you're going to see here. It kind of looks like a 5 wave. I mean, it's been pretty constant. I mean, you could still make the argument that this is a series of ABCs, and it very well might be, but you're kind of splitting hairs at this point, because you still did get this. I think I was talking about this 0.886 level, like around 8,400, something like that. I still think we're going to get sub 80. I think here's my conspiracy theory for the day. I think that some people are trying to get Bitcoin below 75,000 because that'll force MicroStrategy to sell some of their Bitcoin, and that'll increase some liquidity. So I think they might do some sort of like stop hunt or something like that, where because I mean I've read some interviews where Saylor was saying, hey, we're gonna have to liquidate some Bitcoin here at cost, because their cost is like 76,000 or something like that, or whatever it was. It's above 75. So that's my conspiracy theory there. And also you see this nice
sounds like a seek and destroy mission.
Yeah, sure. I mean, well, the thing is, like, they're the most popular like company of that type, so they just hold a bunch of Bitcoin, right? And like that was their entire strategy, quote unquote. So suffice to say that once when crypto takes a huge jump off the cliff here, then so too should MSTR. So that's kind of why I was I wanted to just say, like, okay guys, like, probably get some short positioning with SMST here, because you're still starting to see like if we go through this, I mean, this also kind of looks like an ascending sort of pattern too, but I still think we might get something kind of like this before you get like another rollover. But if you hedge 1-to-1, you could still play it. I still think that you will have some sort of recovery in it, like a Bitcoin, and also with this company too, because they've just been sold down just repeatedly here, and we do get a buy signal, or a weekly buy signal down here. So that's a pretty good sign for some sort of sustained recovery. And you also kind of see that you got a little bit higher buy delta at these levels. So to kind of wrap up here, Nvidia is still getting it's actually got another sell signal, but it's still kind of following the chart pretty well. It looks like a zigzag sort of correction here. And if you get down on this level here, if we go back to this, highly likely they are in concert together. So if you see this bear target 2 hit, with selling in the Nasdaq, to me that kind of looks like a C leg here. It might even extend lower, because then that'll pierce the that 200 daily moving average here. Tesla is overdue, I think.
I cannot figure this stock out at all.
Neither can I.
I gave up.
I was talking to Yimin about this, and yeah, I know, he's a funny guy. we're just because he has his like his signals and things like that too. So Tesla and stuff, and we're just kind of talking about like it's very erratic. I just think that there's a lot of speculation going on with the stock, and it's you know, it's just fun to to burn the shorts on Tesla. So, but I do think you are getting a lot of this corrective sort of move up here, and this leg up here looks like a pretty like a pretty clear sort of B wave. Now you could make the argument that this is it's a golden cross, and now that the 50 is above the 200, everything's recovered, everything's fine. Well, I don't think that that's actually going to be realistic. I think you're actually going to see just a dump down here, probably when everything else does. So, oh, Jake joined just in time for us to drop. Hey, Jake. Sorry. I had to move the webinar up an hour because my kids got this Christmas thing. But yeah, I mean that was kind of it. Any questions, comments, concerns? Nothing. I must have went over everything.
Yeah,
perfectly.
I think I got everything.
Well, Jake, you can stay on for a minute here. I'll just stop the recording. Here we go. Sorry to begin here.